Thank you so much. All right, my name is Kiana Danial. I'm going to show you my proven triple compounding method that I use to retire both myself and my husband from our corporate jobs. That is going to help you accelerate your financial freedom. I'm going to show you how to do this without taking too much risk, even if you're super busy, are living paycheck to paycheck, hate numbers, hate all the finance, Wall Street bro, mumbo jumbo, and even if you're a total newbie and if you're invested before but didn't get the results that you wanted. So I have a question for you. How many of you are absolute beginners here? I want to kind of feel the room here. Put a B in the comments if you are beginners. B in the comments for your beginners. And if you're advanced, put an A so that I can kind of make this presentation a little bit more. So we have beginner and we have advanced. We got both. All right. For those of you who are advanced, and again, this is going to be interactive. If you don't interact with me, I'm going to leave. I'm joking, but I'm not going to leave, but okay, we got intermediate. Thank you very much. So how many of you have reached $1 million in your investment portfolio? If you have, put a 1 in the chat so that I know, again, what to present here. If you have not, put an N in the comments so that I know that you have not yet reached $1 million. If you don't want to share, that's fine too. But actually, the thing that you probably would share is how many of you are here because you're ready to take control of your financial future? Somebody say, I'm ready. And how many of you are here because you want to, reach that $1 million portfolio? Maybe both. You want to take control and want to reach that $1 million. Yes. If that is you, then you're in the right place. It's going to be perfect for both beginners and advanced investors who want to reach the next level of their financial security and freedom. And I started my financial freedom journey with a tiny amount, and I grew it to this. This is my portfolio as of March 2025. It's a $15 million overall portfolio. Obviously, I have so many different investments here. Business Insider has been fact-checking me for years. I have been featured on NASDAQ, Billboard, and Times Square multiple times. I regularly share my timely strategies on Fox, CNBC, Bloomberg, and other business channels. And I have spoken on the same stages as Tony Robbins, Robert Kiyosaki, Susie Orman, and Ray Dalio. I charge my corporate clients $25,000 per hour, but I'm not sharing these to you to impress you. I'm here because I actually want to help you, and I want to impress upon you what is possible and that I'm actually qualified to help you achieve your financial goals. Throughout my journey to financial freedom, I have shared my methods in my mini books. 4 of them have become bestsellers. Cryptocurrency Investing for Dummies was one of the more successful ones as well. And now, right now, I'm working on my new book, Triple Compounding for Dummies, that is going to be available in bookstores near you, October 2025. If you're excited about that, say yay in the comments, as I am. So yes, I have been blessed with amazing success, but the reality is that I am just a mom. And the only reason I continue to do this is because of the impact that I'm making on my daughter as her role model, and for the impact that we've been making it on millions of thousands of people's lives and our members at Investiva who have become now triple compounders. And we celebrate their 6- and 7-figure portfolios every single year at our Investiva live event. And I want to celebrate you if you're up for this the next time we have this event. So Wall Street bros, money managers want you to believe that personal finance investing are way too complicated for you so that you cannot do it on their own. And they don't actually want you to know and figure it out. Because guess what? If you actually figure it out and find out how easy it is to do this, they are going to lose their jobs. And all the juicy commissions and the fees that they are stealing from you. So thousands of our members have now outperformed their financial advisors, and as a result, they have fired them. So if you've ever thought that Wall Street bros, banks, they want you to fail, you're probably right. And they do not benefit from you actually succeeding. They want you to keep your debt. They want you to rely on them so that they can profit from you. So years ago, I was living in Japan. I was studying electrical engineering, and I was a regular guest at this Japanese TV show where, they brought up experts on Japan social issues, and we were discussing different things in Japan. And the show paid me a bunch of money, and I had it all sitting in a bank, and I didn't know anything about money management. I didn't even care because in my upbringing, I was taught that money is the root of all evil and is not important. Type a yes in the comments if you've ever taught any of these belief systems, that money is not good, rich people are greedy. If that's you, put a yes in the comments. And then something interesting happened in 2008. Again, we need to get the interaction in the chat a little bit higher up, but something interesting happened in 2008 How many of you remember what happened in 2008? It was a massive global economic recession. Businesses were going bankrupt, people were losing their jobs and getting divorced as a result of it. And turned out that money was kind of important, right? So we were talking about this in one of our shows, and you can watch this video on YouTube. And one of my panelists said something that I kind of had heard of, but didn't know what it means. He said that the governments are printing money to save the economy. And I was like, well, that's good. But he said, no, this causes inflation. Now, how many of you have been suffering from inflation? Put an I in the comments if that's you. And so basically, he said every moment that your money is in the bank, it loses value. And he said that the best way to prevent your money from losing its value is to start compounding. I had no idea what compounding means. Here's how he explained it. He said, imagine you have a small snowball, and as it goes down the hill, it starts getting bigger and bigger. And because the surface gets bigger, you get more and more on top of it. It gets bigger, bigger, faster. It becomes this avalanche. Compounding kind of works like that, but instead of snow, we're talking about money. Okay. And I was like, wow, this is so cool. I need to get on in this compounding thing. And I have no idea how to do this. So I'm going to do the next best thing. I'm going to go hire somebody who's already done the compounding thing. I'm going to find a financial advisor to manage my money for me. And I thought this money manager with all their fancy C-level titles would not only have my best interest at heart, but they would be the key to me getting rich and making my money continuously grow so that I could be set for life. So I gave him all of the money that I had saved from this show that I was on. And I thought they had my best interest at heart. And it's like their job, right? But it turns out not so much. Throughout the years, I noticed that my portfolio was not only not growing, it was shrinking. So I got skeptical. I started looking more into how money managers and financial advisors actually make money. And I found out something that absolutely infuriated me. I found out that they had their best interest at heart. They invested my money in stuff that made them compounded income through the commissions that they were getting from their partners and companies. They invest my money in instead of what was going to actually make me money. And on top of that, they were taking a commission off what little money I was making. So they were earning from compounding, and I was paying in compounding. I was reverse compounding. Now, how many of you have parents who have a financial advisor? I don't know if you guys are in the US here. I don't know what the base is here, but the unfortunate truth is that a lot of your parents or you have been getting ripped off for decades. And I want you to text them right now and ask them if they use a financial advisor or a money manager. And if they do, ask them how much they pay their advisor. They will never know. They have no idea. And their advisor is almost certainly charging them a percentage. It's called AUM, assets under management. And it usually is about like 1%, sometimes 1.2. And it doesn't sound like a lot, but over the course of your parents' lives, they have probably paid 25% or 28% of their returns to this advisor. And they have no idea because these fees are hidden. They're using the same law of compounding, but instead of making your money grow, they are reverse compounding, paying Wall Street bros at a compounded rate. Now, if this is not bad enough, I found out that 96% of money managers underperform the market average. So it wasn't like I had chosen the one bad apple among a sea of amazing financial advisors. The market average return is about 10 to 12%. Money managers underperform that, which is absolutely ridiculous. Like you're way better off just putting your money in VU, in like S&P 500. And they, on top of that, they like say they lose money and then they charge you a commission for completely mismanaging your money. Now, how many of you are starting to get angry a little bit, even if you're not participating in the chat, but you are starting to get angry a little bit? So put an A in the comments if you're starting to get angry. But I still didn't feel confident enough to take my money out and kept it with that money manager. So a few years later, I got fired from my job and I really needed to get back that money to pay rent. I had run out of money to pay rent. So I called up the money manager and said, hey, I need to pull the money out. And he said, sure, but you need to pay 75% penalty because you are taking it out early. And I'm like, what do you mean early? And he's like, you remember that 500-page document you signed when you got started? You should have paid more attention to the terms and conditions. I was livid, team. So what this means is that if you'd put 100K, you would have come out with 25K, thanks to this early withdrawal penalty. And on top of that, they also had mismanaged my money. So what I had left with them was even lower than the initial amount. Great investment, right? Not so much. So I was really angry, felt defeated. I felt played with. And I was like, enough is enough. I'm going to take things on my own hand and to be in control of my own money. Tim has been there. I got you, buddy. It's crazy. I became obsessed with learning about finance and investing. I studied for CFP, CMT, CFA, all these fancy certified financial titles these money managers had. And I worked for different companies and brokers on Wall Street. I navigated through all the conflicting strategies that all of these finance people were giving. And after years and years of trial and error, I finally created a proven system that I now call the triple compounder system. This system not only gave me full control over my money and peace of mind about my financial future, but it also allowed me to retire my husband, who is a rocket scientist, by the way, from his corporate job that was burning him out. And that gave us the time we needed to finally work on our relationship and prevented a near divorce. Now, this financial freedom has led to mobility freedom, career freedom, and time freedom for my entire family. How many of you would give anything to achieve this level of freedom and peace of mind? Again, I'm not going to teach you some jargon. I'm going to teach you stuff that actually works. Somebody say me in the comments. If yes, we're going to get to secret number 1 out of 3 today. The easiest, lowest way to start making your money make babies right now. So after I got screwed over by that money manager, I decided to go to Wall Street. I started to work at New York Stock Exchange, and I was ready to dive into the markets like you might be right now. And I obviously didn't have much experience. And I was just like, you know what? The best thing I can do, I'm surrounded by all these best traders at New York Stock Exchange. So I was like, okay, let's see what they're doing. I'm just going to copy their moves. How many of you love, like, you know what? Just tell me what you're buying. I'm going to copy your moves. Yes. I was exactly like that. I'm like, I'm just going to copy your moves. So I went all in. I'm like, these guys know what they're talking about. I went all in with my savings of $15,000 at the time, which was a lot of money for me. And I was so ready to become a millionaire overnight, copying the best Wall Street finance bros. And can you guess what happened? You probably can guess what happened. I lost my whole entire $15,000. And I'm like, girl, how can you mess things up? All these finance bros are making millions of dollars. You're just copying them. How on earth did you lose all of your money? Like, what in the what? So I'm beating myself up. I made a post on LinkedIn about it. I'm like, investing is a scam. And then to my surprise, this guy, Guy Spire, slides into my DMs. Turns out he was trained under Warren Buffett. He's the best-selling author of the book, Education of a Value Investor. So he offered to send me a copy of his book. And he's like, Kiana, I know you have a lot of ability, but you're doing all of this wrong. And I'm like, respectfully, what do you mean, sir? I'm doing what everybody else on Wall Street is doing. And then he said something to me that forever shifted my perspective on financial markets. He said, you've got to stop day trading and start investing. And I'm like, but I'm trying to compound, the snowball effect stuff my friend in Japan told me. Shouldn't I be day trading if I want to compound? And here's when I finally figured out the difference between day trading, investing, and compounding. So what I was doing when I lost that $15,000 was day trading. I was trying to guess where the markets were going to hopefully make a quick profit, which is super high risk, right? And wipe me out of the market. Here's a quick chart that shows you the differences between day trading, investing, and compounding. So what you need to understand is that pros on Wall Street who are day trading, they are not managing their own money with their strategies. They are managing other people's money that they have zero psychological attachment to. And it's not just 15K. They are trading millions and billions of dollars of other people's money. The one crazy thing that I found out when talking to some of the most successful hedge funds on Wall Street is that they only have to be right 51% of the time to pocket massive profits for themselves on commissions. Only 51%. So 49% of the time they can be wrong. But if you apply the same strategy to an individual account with less than 100K in it, you are going to lose all of it before seeing any profit. It is way higher risk because you're going to be guessing where the market is going to go every day, every hour, every minute. Now, compounding and value investing, while there is always risk involved, obviously, they're typically lower risk because, first of all, you get to choose assets that match your exact risk tolerance that will increase long-term and helps you grow your portfolio faster over time by generating returns on top of prior returns. And I'm going to show you how in just a little bit. So what's cool about compounding is that it allows you to generate income. It's one of the phases of my triple compounding. And what most people do when they get this extra income is that they go and spend it. But if you take that extra income and then invest it, it's kind of like double compounding. Or double compounding. So I took my friend Guy Spire's advice, started compounding, investing in my own, started now with $500 per month, ignored all the hype, all the trends, all the clickbaits, and what other people on Wall Street were buzzing about. And in other words, I started double compounding. But the process of doing this was still very time consuming. Now, how would you like to not only compound your money, but also compound on saving time? Because how many of you can agree that time is infinitely more valuable than money? Time is not money. Time is infinitely more valuable than. That's why I'm talking so fast here, because everybody gets 24 hours. There is an abundance of time, of money out there, but time is limited. How many of you are getting it? This is exactly why I speak so fast. I'm trying to save you time. So I felt the exact same way as you do. This is how I realized that if I automated this bridge between generating and accelerating my portfolio, I can fast track my freedom. Somebody say fast. Automating the process of generating and then accelerating within my portfolio, like double compounding, this saved me so much time and allowed me to accelerate my portfolio a lot faster. I'm going to get into this in just a little bit, but this is actually what I mean by triple compounding. Okay. So I systemized the whole thing through what I now call the triple compounder system. And I'm going to show you in just a little bit. And the result of that, in 3 years, I got pregnant. I'm like, oh my gosh, we need a house. And we found a dream house. It was $50K more expensive than the budget that we already had. And I was like, okay, let me go look at that initial account that I created 3 years ago with $500 per month. And I started triple compounding. And to my surprise, that $500 per month account had triple compounded to $53,000, just enough money that we could put in and turn that into our dream house. So in some cities, this $50K could cover the entire down payment for a house, right? So this is the power of triple compounding. So now that I've fine-tuned my triple compounding system and shared it with our InvestDiva members, many of them are surpassing me in terms of speed. And that's why I know you can do this too. So we get so many testimonials that we call #DivaWins every single day from our members who use the strategies that I'm going to share with you today to triple compound, automate the strategies that are perfect for their risk tolerance and financial situation. Here's Sophia, for example. She hit her 100K milestone in 2023. And then 5 months after that, and of course, results are not typical, but look at this. She took to our premium investment group to celebrate her 200K portfolio. And then she has now reached a 500K portfolio, even after the markets dropped this past January. Isn't that amazing? How many of you would like to come and celebrate your 500K portfolio with me at our next event? And what are you going to use that money for? I want you to think about this because, again, investing has a lot to do with emotions and your mindset. That's why tonight I would challenge you to sit down and think about what you really need this money for. What is your actual goal? What are you going to do? Are you going to pay for your kids' college? Are you going to turn your home into a larger home like I did, travel the world, help your family? Think in your head right now, what would I do with $1 million in 5 years? So now you're here listening and you're like, okay, this is cool, but what is your actual system? So let's get into it. So these are the 5 steps that I call the InvestDiva Diamond Analysis, or IDDA for short. Just like a diamond, it has 5 points. How many points? We're looking at 5 points here. And I call the first point capital. And what I mean by that is you identify your risk tolerance. Not taking this step. Again, listen to me here. Maybe some of you were here, you wanted me to give you some mumbo jumbo about trading, and I could do that too, but I will tell you this. Not taking this step is the exact reason why 96% of traders lose money in the markets because they are blindly following the market noise without having a plan that is the exact fit for their ability and willingness to take a risk. That's why I have a free risk management toolkit for you right now as a gift, where you can calculate this on your own. Again, I'm not going to dive into that right now. We don't have time because I do want to actually share my strategies here. But if you don't do this, you are going to lose all of your money, and you are going to cap your income potential. Is it okay if I share my gift with you? This is absolutely for free. You can go grab your free risk management toolkit and your triple compounding workbook for free at triplecompounding.com. I can actually give you the link here to go ahead and download your. Thank you so much, David. So when you get there, you're going to get to a page that is like that. You're going to register for a webinar that I expand more on all of this. And once you attend, you're going to get the risk management toolkit and the workbook for free. So what does this actually mean? For example, when I was single, just getting started in my career in New York, my willingness to take a risk was higher, but my ability to take a risk was lower because I was not making much money. Years later, when I became a mom, my willingness to take a risk went down, but my husband got a bonus, so our ability to take a risk went higher. So I adjusted my system. So while I was on maternity leave, my system was making me on average $9,580 per month. How many of you would like to make $9,580 during maternity leave? Would that be awesome? And here's the kicker. Did you know that if you, instead of purchasing every new iPhone released since 2007, if you had invested that same amount of money in Apple stock, your investment would have been worth $3 million by now? Can you think of anything you would have done with $3 million? Way better, right? So that is why the best time to start triple compounding was 20 years ago. The second best time was today. But there is something that you definitely want to avoid doing. And that is reverse compounding, which is what I was doing with that shady money manager, paying him all the commission fees that compounded and made money for him, not me. The same thing happens with the commissions you pay on your retirement accounts like 401k, IRA. Most people are not even aware of these fees. These could add up to millions of dollars compounded over time. In fact, Americans lose $5.7 billion with a B every year to 401k and IRA early withdrawal fees. So we just covered the first point of my Investiva Diamond, which you're going to do is going to be your homework for tonight to calculate your risk tolerance, your capital analysis. Then we get to the second point of the diamond, which is intentional. Again, you got to know where you're going. This means breaking down your financial goals to short-term, medium-term, and long-term. Oprah Winfrey says the one thing that all successful people have in common is that successful people know where they want to go. You need to know where you're going. So this will help you pick the right assets for your unique goals and financial situations without just blindly copying whatever guru that comes and tells you a stock to buy. So for example, when I first got started investing, I had just got fired from my job. I needed money to pay rent. So I was triple compounding to make an income. But now I have other streams of income, like royalties from my 9 books, my corporate clients who pay me $25,000 per hour, my Investiva business. So the majority of my triple compounding is to make my money make money babies on the side, to create an impact by teaching others how to do this, to build a legacy through my charitable work, and to create generational wealth for my daughter and her kids to come. So why are you investing? Is it income, retirement, impact, charity, legacy, generational wealth? You need to know where you're going because these 2 points is kind of like a GPS. You need to know where you are and where you're going to go. And then based on that, you can choose what scenic route you are going to take. And the triple compounding system is exactly the same. Basically maps out your exact triple compounding journey and more importantly, guides you every step of the way to get you to your destination, just like a GPS. The third point of the diamond is called fundamental. This means it's now time for you to go asset picking and pick investment assets that match your risk tolerance and goals. Depending on your age, you're going to be my portfolio for my daughter, who's 7 years old, is completely different than the portfolio I have for my dad, who is 80 and is very different. Both of them are different than the portfolio that I have for myself. I'm 40, almost one. And this is where the fun begins, because now you know your risk tolerance and you know where you want to go, and you can pick your investments with confidence instead of looking for some Wall Street guru to tell you what to buy, or even myself on social media. And I mean, it's funny because people like just buy it, and like they go on my Instagram, my posts where I say, these are the 7 stocks that I'm buying this week. Everybody goes and eats them up. And yeah, like it's good for my social media growth, but it's a wrong approach. You need to do this on your term and your values. Okay? So from here, we get to the fourth and the fifth point of the diamond, which easily can help you figure out the cheapest price to buy and the highest price to sell your assets, that I'm going to cover in secrets number 2 and 3 of this presentation. So to recap, we had the 5 points of the diamond. Point number 1 is capital, identify and increase your risk tolerance. Number 2, intentional, break down your goals. Number 3, fundamental, go asset picking. Number 4, sentimental, find out what other people are feeling. And number 5, technical, the best price to buy and sell to accelerate your triple compounding. So we're going to get into that. And this is basically the framework inside the triple compounding framework. Cool? So obviously we have so many success stories that I'm not going to share with you right now. So the second secret is the no math compounding. So this is one of the biggest questions that I typically get over and over again, is that, Kiana, this is such a cool idea, or this is very exciting, but I suck at math. Or like, I want to get started, but my brain I can't do this. Or I'm not smart, or I was never good in school. So what's crazy is that I went to school in Japan, and they had to get me a tutor in class to help me with math. And it literally drove me to depression because I felt so dumb. And that's what I actually love about triple compounding, is that you don't have to worry about math whatsoever. Now, this is my husband, Matt. He's an actual rocket scientist. Like literally, he actually designed the world's fastest helicopter. And after we got married, he became interested in this whole triple compounding thing, and we started investing together. And he's like, I can outsmart your system because, math, blah, blah, blah. I'm like, oh, well, he is a math genius. So I'm like, sure, after all, like, you probably know better than me. So even though I didn't like his mansplaining, I started listening to him. But things started to go south from there. Every time we made money based on his suggestions, he got super excited and was like, you see, I told you. But then every time I lost, we get super upset, would want to like show off to me. It was like, oh, here's a quick math solution to make up for the losses. And we would like be digging a deeper hole. It was kind of like going to a casino and losing and then taking more money out of the ATM. And this got me curious because I wanted to know if it's just my husband trying to be my hero and acting this way, or if this is universal. I wanted to find out if you really need to be good at math to succeed in the markets. In fact, I wanted to know if math had anything to do with financial success. So I decided to go to the source and ask the most douchey Wall Street bros who call themselves quants. So they're basically known as the rocket scientists of Wall Street, and they're pretty intimidating. So I built up the courage to ask one of my friends' husband, who has a PhD in math from MIT and is a quant at this big Wall Street company, and was the most perfect example of a Wall Street bro. He wasn't exactly Wolf of Wall Street, but his lifestyle kind of similar. So I hit him up and I'm, hey, be real with me. Like, I see you're always traveling to Las Vegas with your quote unquote clients at work. It seems like you're doing everything but math. Please be real with me. How much do you really use your math PhD? And he looks at me and is like, yeah, we don't really use math. It's all for a show in front of our clients. And then we get them drunk in the after hour, make friends with them, and sign them up to give us money. And I'm like, interesting. I asked around a little bit more and found out that this actually, in fact, is true. The markets are not about math at all. The stock prices, crypto prices, options prices, they go up and down because of crowd psychology. And you can especially see the negative impacts of crowd psychology during market crashes and times of economic downturn, where people's emotions kick in and try to solve a short-term problem, but instead create a long-term disaster. And that's why, with the fourth point of my Investiva Diamond, we call it sentimental analysis. We measure the market sentiment and actually go against the crowd psychology. For example, when the Wall Street bros are super hyped up about an asset and are excited to buy more and more, pushing the prices higher and higher, what do? At Investiva, we do the opposite. Instead of following the market hype and buying at the expensive prices, we start selling and taking profit from the assets we bought at a lower price. And this is where, by the way, allocation becomes very important too. So for example, I'm not going to give you the example right now. We can have, well, let me just tell you, in January and February, when the markets were dropping, US market were dropping, I was investing in Chinese assets and I was selling those ones with a profit, going against the crowd. Then when all Wall Street bros are super scared and fearful about an asset or the economy and they're like selling, pushing the prices lower, what do? When they're selling, let me know in the comments, what do you think we do? When they sell, we do the opposite. We buy our favorite assets at a bargain price, just like we find good deals on Black Friday. Yes, Drill got it. How many of you love buying stuff when they're on sale? This is exactly what it is about. So recessions make the most millionaires because you can buy awesome assets at a lower price and then you can keep compounding for the years to come. Obviously, we're talking about assets, not stuff. Now, how many of you would like to know the cheapest price you can buy your favorite assets so that you don't have to spend more than you actually need to? Like if you knew that, okay, like this Black Friday sale, they're going to drop the price even more, like towards the end of the night. How cool would it be if you knew how low the prices could drop before you actually buy? This is what the fifth point of the system, which I call technical analysis, shows you. Now, let me ask you this. If you buy your favorite asset at a low price, what would you want to do next to make a profit? You want to sell at a higher price, right? Buy low, sell high. That's the whole game, right? And it's one of the most effective ways to accelerate your compounding, but it could also be very, very high risk if you don't have the right tools. Literally everybody wants to do the same exact thing, not just you, not just me. All people on Wall Street, out of Wall Street, anyone who's in the trading game, they want to buy low, sell high. So this is where we can go and beat the Wall Street bros at their own game, which helps you not only figure out how the Wall Street bros are feeling, but stay ahead of the game and go against them without taking too much risk. I actually learned about this when I was consulting for a Wall Street company that did something called frequency trading, and they wanted to expand their services in Japan. I ended up traveling back to Japan with them a bunch of times, and at one of our corporate after parties with one of the Japanese clients, I started talking in depth about market sentiment. And there was a guy, Sato-san, who told me about an indicator that helps their company in Japan figure out what the Wall Street firms are doing so they can go in and beat them at their own game. How many of you are ready to start the juicy parts? Say yes if you're ready. And if not, we're not going to get into the, okay, yes. Israel is in the house. Let's go. So with the first point of the diamond, you're going to find out your risk tolerance, if it's low, medium, high, or somewhere in between, right? Once you know your exact unique risk tolerance, you can then plug it into the system and use this indicator to make great investments that are perfect for you. Nobody else but just you. This way, you don't have to keep listening to the news to find out how the Wall Street bros are feeling. You don't need to listen to the headlines. This Japanese indicator figures it out ahead of time because remember, Japan is ahead of the US, right? And then you get to decide how to plan ahead based on your risk tolerance. So Tony Robbins says, Leaders anticipate, losers react. And this is exactly what I love about the triple compounder system, because it allows you to anticipate the market sentiment so you can let your money make money babies while you're out there enjoying your life. So this system kind of looks like the ski slopes. How many of you have been to a ski slope? So when you get there, you normally see a sign like this that shows you the difficulty level or the riskiness of each route, right? Double black diamond in America is like, oh my gosh, experts only. High risk, we got intermediate, medium risk, we got beginner, low risk, right? And so if you're a beginner skier, you should only go down green. As you get more advanced, you make your way all the way to black diamond. And so my system works the same way. If you have a high risk tolerance, then you choose a high risk asset and use the first signal of this Japanese indicator. If you have a medium risk tolerance, then choose a medium risk asset and use the second signal. As your risk tolerance goes low, you have to wait for this third signal to get in. You can't just jump right in. And if you can't count to 3, then you know enough math to use the system. So for example, Chipotle, how many of you, I don't know if this is a US-based crowd, but how many of you have heard of Chipotle Mexican Grill? It's one of my favorite restaurants in the US. So it's a chain and it's a publicly traded company. So back in 2017, they closed all of the restaurants because they made people sick with a foodborne outbreak. And the stock crashed like there was no tomorrow because the market sentiment was very negative and the media was trashing it. My system showed me that Chipotle is fast becoming undervalued. And if I have a medium risk tolerance, because this is very important, my risk tolerance was medium. So it said, if you have a medium risk tolerance, I should actually buy Chipotle once it hits 270. And if I was willing to risk not buying at all, if it doesn't drop that low, that was the perfect strategy for me. And that matched my risk tolerance. Yeah, I'm cool with not buying at all. I only want to buy it at 20 to 70. And let's rock and roll, medium risk. So someone who had a higher risk tolerance than me could have bought their way down at a higher level, like these levels over here. That makes sense? So for me, and I'm going to show you exactly how this works in a second. So for me, 270 worked, and I automated my system with a method I'm going to share with you in secret number 3. And it automatically bought me only 37 Chipotle shares when it dropped to the bottom here at 270. And in only 15 months, the stock price was above and beyond where it was before the crash, which means it gave me 202% return on investment, which means I made $30,200 of pure profit. No commissions, no mumbo, in just over 1 year without doing any math and without being stuck to my screen all day. Another stock, NVIDIA. I've been investing in NVIDIA since 2016. So it's funny because everybody's talking about NVIDIA right now. Oh my gosh, NVIDIA. This stock started crashing in 2021. And by September 2022, it had crashed 66%. Most financial gurus were getting out and people were getting super pessimistic about it. But my system showed me exactly how low NVIDIA stock price could drop to. So instead of selling, me and my premium investors at Investiva, we bought NVIDIA right as it bottomed out in 2022. And then in just 18 short months, it was back up by 797%, which is where some of our triple compounders and myself took partial profit. And then we waited for the next round. How many of you would like to see a 797% gain in your portfolio? Again, results are obviously not typical, but the beauty of this is the ease of the prediction. So I explained these to my husband back then, and he finally acknowledged that my triple compounding system is getting better results than his math, and is like, fine mate, he's Australian, or whatever Aussie says, fine mate. And just a few years later, the girl who sucks at math, was able to retire him, the rocket scientist, from his corporate life that was burning him out without doing any math, just using the triple compounding system. And that freedom allowed us to grow closer to each other and as a family and live a more fulfilled life. He's now a YouTuber. He's now a tech YouTuber creating computers, which is super duper cool. And he just loves it. He absolutely loves it. So Business Insider actually wrote an article about me on this, showing how my system helped us fund the down payment of our $8 million home, and how my, well, then 6-year-old daughter's portfolio was up 568%. This girl is going to become very spoiled. But how many of you would like to set up your family like that? It's really cool, right? So that was secret number 2. So I just delivered on my promise. I showed you why being a math whiz can actually cost you when it comes to triple compounding. And now you might be saying, I get it. I can totally see triple compounding is the key to securing my financial future and fast track my freedom. I get it that I don't have to like take more risk than I can afford. And I totally can see why I don't need to be a math whiz or a finance jargon expert to be profitable. But I'm so busy. How on earth can I find the time to do all this? So let's jump to secret number 3. No time compounding. How to become a profitable triple compounder spending just 1 hour. Lucia has a master's degree in math. Good. Amazing. Use it for something else. You don't need to use it here. Use your math for developing AI and things that actually create you money. The point of investing shouldn't be using math. That is my whole point, right? So again, I don't know about you, but as a mom with a business to run and a team to manage, and between all after school activities, which basically makes me feel like my daughter's personal driver, if I find any spare time, I prefer to just take some alone time or like take a hot shower without getting interrupted. So, and I'm curious, how many of you are just so busy that you barely found the time to like attend today's training? I bet many of you are very busy, right? And the thing is, we're all so busy, right? And if we get any spare time, we're prepared to like take a 5-minute nap. And so for most of you, you don't want to sacrifice nap time or yoga time or family time or hot shower time. And I don't want to give that up either. So the first 2 points of the investment diamond that I just showed you are going to take a minimal amount to set up. You're going to do that tonight. Once you go to triplecompounding.com, get to the risk management toolkit, you're going to fill it out. You're going to figure out exactly where you are financially, where you want to go. And then you do that once per year when something major happens in your life, like you get a raise, you lose your job, whatever it is. Maybe you set up a new business, maybe you have children, maybe you buy a house. And so that is the setup time. Okay. So this part is not an issue, right? But if you're but you might be worried that, oh my gosh, especially with everyone they've been hearing here in this training today, oh my gosh, do I have to like be stuck on my screen all day and like trade in, out, in, out, in, out? And I would encourage you not to do that, even if you're doing options and more advanced swing tradings. And here's why. When I first started triple compounding, I spent hours analyzing the markets every day, and I reported them for big financial companies globally. And then after I had my daughter, my time became very limited. So it was impossible to keep up the way that I used to. So what I started to do instead of being stuck on my screen all day was to check the markets only once per day in just one of my 15-minute pumping sessions. I apologize to any guys in the room here, but that was a reality. So I went from hours per day to only 15 minutes to manage my account. And so I reduced this to once per week eventually. And this actually increased my profits. So here's Jill says, I tried to register on the website, but it's hanging where I press submit. Thank you so much for that feedback. Arlene is here to help you out with that. But here is a snapshot of my system in action. And so I've taken a bunch of things out because I use some other systems here. But this is back in 2018. This is before Tesla was political or crazy. And my system showed me that the price of Tesla stock could go down because of this line. Okay, so this is the price, broke below this green cloud here. And this showed me that it could go down to as low as 262. So now instead of constantly checking my charts to see when the price gets there, I simply told my broker's app that I want to buy at 262. How many of you know what that's called? This is called a buy limit order. Simple. So after I place this buy limit order, which literally takes less than a minute, I go about my day and forget about anything compounding. Then I get a notification that my order was executed. I bought at 262. So when it dropped below 323, which we call it a pivot level, my system showed me it could go to as low as 262. So I set my buy limit order at 262. And then the order is executed. What do? We want to use the system to find a good price to sell, right? And Tesla is one of the stocks that I actually do long-term swing trade because of its personality and characteristics. We can talk more about that in the future. But so I monitor my system once a week. On October 25th, my system indicated that the optimal price to sell for a medium risk investment is 327. Again, this is personalized to my risk tolerance. So what do, I tell my app to, this was Robinhood at the time. I now invest with Charles Schwab. So I told my app to sell at 327, go about my life. This one is called what? A sell limit order. And this was the indicator. So what did that mean? It means that in just a few months, I earned $65 per Tesla share. And if you had bought 100 shares, you would have generated 6,500 on autopilot, just like I did. The levels I'm going to show you in just a second. I might actually walk you through on the chart in a second. All right. But if you do the math, again, because this is automated, that means I generated $1,300 per minute of the time that I spent on doing this. How many of you would like to make $1,000 per minute? Isn't that cool? So from 2017 to 2024, my system created multiple opportunities. So these lines, the system identifies them. And I use Ichimoku and Fibonacci. You can see the Fibonacci retracement level here. And we created multiple opportunities on Tesla for me and our members, premium members, allowing us to buy low and sell high repeatedly, accelerating our compounding by a combined 3,000% profit. If somebody had just bought Tesla and held it, they would have missed out on a significant amount of gains. So this is how you can use the triple compounding system to generate income within your portfolio, then automate the strategy, and then accelerate your profits in just 1 hour per month. So this is kind of like I call the buy and sell limit orders my secret weapon. I like a crock pot. You set it for good and come back to smell the profits. And the beauty of this is that it removes the emotions, especially now that with the headlines, every day is a new headline. This removes it. You don't actually have to watch the headlines. Okay. So using this, I now spend even less time compounding than I first did. And I do this once per month now to manage my whole $15 million portfolio. I do this when I go live with our $1 Million Family Accelerators. I share what I'm doing. We mastermind together. And that is it for the month. And I come back the next month. So this was the final step in the triple compounding system. Just an overview to generate from within your portfolio, automate, and accelerate. How many of you are kind of getting what I mean by triple compounding here? You generate, automate, accelerate. And if you're an experienced investor, you might be thinking, okay, this kind of sounds like you're trying to time the market. I've tried other systems like that and never worked. And you're right. There are so many trading gurus out there trying to do things like, momentum trading or scalping, which could be extremely stressful and cost you all of your time and money. What is different about triple compounding is that we're not trying to time the market. That almost never works because it's purely speculative. We are pricing the market by studying history. And because history doesn't repeat, but it does rhyme, this works. And the same is true with the market's ups and downs. And the simple reason for that is that human psychology remains human psychology. Collectively, we just keep repeating the same patterns over and over again. And when you learn how to identify the Wall Street Bros emotions patterns, you get to beat them at their own game. And because they are the ones moving the market, like again, me with my whatever $15 million portfolio, I'm not going to be moving the market. They are going to be moving the market because they have billions of dollars invested in it. So when you study their emotions, because they're already moving the market with their emotions, we get to beat them at their own game. Again, we're not like really stealing from them. They're already in the markets. They have whatever that they have to do, but we can go and eat the crumbs of what they're doing. And by the way, this actually works internationally as well. Market sentiment is market sentiment. Humans are humans all over the world. And this has helped so many of our members, men and women, accelerate their financial freedom. And the side effect of that is the fulfillment that I get from celebrating their wins. We get so many testimonials that I'm not going to bore you with here. And these are the stages. So again, at the beginning of this presentation, some of you said that you were beginners. Some of you might be fearful, not much knowledge, hopeful that somebody here in this today is going to give you something. Some of you, then if that's you, then you're going to get in. You're going to become an in control diva or devo tonight after you calculate your risk tolerance with a toolkit that you hopefully have already bought. And from there, how many of you, by the way, are excited about what I talked about? Doesn't it make it easier? Like I could have come here and pretended I'm like the smarty pants person and thrown at you a whole bunch of mumbo jumbo. But investing is actually a lot more simpler than that. Like the money is actually in the simplicity. And so that's how people come in. They become in control. Then they start investing the right way. Then they become wealth divas. Then they become triple compounders. And then they reach their $1 million portfolio, like many of our members who already have. And on the flip side, I know that I spoke very, very fast. And you're like, oh my gosh, did I look like this to you while I was speaking again? So I wanted to kind of give you an overview of what I mean by triple compounding. Literally, my book is about 400 pages that is coming out in October, but I try to give you an overview. And if you'd like to, I actually have a question for you. Do you think if you follow the steps that I just showed you, they're very simple steps, and you're way more smarter than I am, right? You guys, probably everybody here is way smarter than I am, but clearly my portfolio is bigger than you. And it's not because I'm smarter, it's just because I followed the steps. That's it. And I didn't discover them. I didn't invent them. These are what already works. And so do you think if you followed this, if you did what I showed you in secret number 1, identify your risk tolerance, break down your goals, follow what I talked about in secret number 2, when asset picking based on your unique risk tolerance and, again, financial goals, and then used technical analysis, sentimental analysis, the way that I showed you, and then place buy and sell limit orders exactly when my weird Japanese indicator told you to do so, do you think it could be successful? Like, how many of you would like to grab one of these $1 million or 100K portfolio awards that I have behind me? Certainly, yes, team, let's go. I want to celebrate you. These are the awards that we give. And this is my this is my electrical engineering degree, by the way, that I never use. So if you have a math degree, congratulations, you're never going to use it for money. And so obviously I have spent hundreds of thousands of dollars going through the certified financial planning, chart market technician, financial educators council, all these things, and I've lost so much money. I started trading Forex and I got to crypto, and then I did all of these things, messed things up after finally I figured out the simple way to actually do this. So how many of you would like to get the simple way of actually doing this without spending so much time, without going crazy, without trying to like follow the headlines and copy the next? Yes? Awesome. So the trick question is, how many of you would prefer to spend time on trial and error and figure things out on your own? In the meantime, miss out on compounding opportunities that is right now here in the markets for us, potentially lose a bunch of money like the other 96% traders who lose their family's money and more in the financial markets? Nobody, right? So that is why I know it is my obligation to share with you what I learned the hard way, so I can help you get where I am today faster without all the stress and the money lost and the missed opportunities in compounding. And so what I'm going to do, so the link that I gave you before, you're going to go ahead and download your risk management toolkit. Oops, my company, this is a very bad time for my, that was not the thing that I wanted to share with you. So if that is not working for you, it is okay. But also I want you to, if it is working for you, this is what you need to do, because You need to attend a webinar to get the risk management toolkit and the workshop, but you already listened to me talk. So you don't need to actually do that. So what I want you to do is that go to that link, get the put in your emails, and then once you get to the webinar, whenever it is, I have people in the chat box there, all of my team. Tell them, hey, did I freeze? Oh, I'm still here.
You're still
I'm
there.
here.
Yeah.
Okay, great. Um, Tell them I just saw Kiana present this morning. So please give me the risk management toolkit now. And I'm going to actually tell them that. So anyone who says this, you're just going to be able to get the risk management toolkit without having to watch the whole 3-hour video there. All right. So that is thing number one. And then number two is that next week, I'm actually holding a 2.5-day live event that I actually dive into the technicalities of things. So many of you were asking, okay, how did you decide on those lines? How did this happen? So we basically are going to, it's 2.5 days. I obviously cannot teach you all of that in only 1 hour. And so we are doing a 2.5-day triple compounding live event. And lucky for you, currently it is absolutely free. So what you have to do is that you can go to triplecompoundinglive.com. Hopefully my computer starts acting properly so I can actually get to here you go. So typically we charge $297 for this. It is going to be free. And oh my goodness, you can now see my email. I didn't realize that. If you want to join as a VIP and ask me questions live, we are 76% sold out. But again, as a even if you attend as a general admission, you get to attend all the things and get, oh my gosh, please don't grab my, please don't call me. So triplecompoundinglive.com, the event is going to be April 5th and 6th, 2.5 days. We're starting Saturday at 10 a.m. and we are going to expand on everything triple compounding, from options to swing trading to generating, automating, and accelerating, so that you can really get a hold of this and I can actually show you in live. With the VIPs, we have hot seats as well that you can get in, and I'll put you on the hot seat. I'm like, hey, this is what I mean. And we can like really work on the charts, because that is where the magic really lies. So, and the pre thing for that is for you to actually do your risk management toolkit and understand your risk tolerance before you come to the triple compounding live event, because otherwise you're going to be lost. You're not going to understand half of the things that I'm saying. So we have 2 minutes to go. If you have any questions, let me know here in the comments. But again, the triple compounding live event, we're doing this right now. We kind of stopped doing this because I was working on the book, but we're doing this right now because the markets are crazy and everybody were asking me questions. So we're just bringing it back to help everybody out. You wear the gear of a Tony Robbins presenter? Do I? Tony Robbins is great. I love him. He actually is a reason why, like, I invested in many things with him to fix our marriage. So I think he's great with relationship advice, but not so much with finance advice. Oh, that's what you're saying. Tony's great. Thank you so much. I guess we have 1 minute to go. And if you have any questions, let me know. Otherwise, this is my time. Thank you so much for joining.